hear me.
Great. Well, welcome everybody. Welcome to our webinar this morning. Just to introduce myself, I'm Vicky Klamuka and I'm the Growth Hub Manager at SEMLEP. And for those of you who aren't familiar with SEMLEP, the South East Midlands Local Enterprise Partnership is a public-private partnership which exists to support the economy in the local area. And we do this in a number of ways, and one of those is through running a growth hub to provide support for local businesses. And like many of our business support partners over the past few weeks, we've been working hard to really try and support local businesses amidst the COVID-19 crisis. And I just want to say thanks to all of you who have completed our COVID-19 Business Impact Survey. And one of the things this survey has been telling us is just how big of a concern cash flow and understanding the finance options that are available is to our local businesses, which is why we're holding this webinar this morning. We recognise that the landscape is changing almost on a daily basis at the moment, so our intention is to provide you with as much practical information as we can in the short time we've got together. From a practical point of view, we're going to use the live chat function on Zoom to pose questions to the panel, and it would be helpful when you're doing that if you can click the all attendees, just all panellists on there. Because that means that others can kind of see and view the questions and any responses on there. And we'll have a couple of times during the webinar that we'll actually pose some questions kind of verbally to the panel as well. Right, I would now like to introduce you to our panel. If everybody in the panel could put their videos on and make sure they're on mute for the moment, that would be really helpful. And hopefully what you should see now on the screen is a list of the people that we've got on the panel this morning. So I just want to say a big thank you to all those who've been willing to participate this morning. We've got two kind of topics to cover. We're going to talk about the CBIL scheme, the Coronavirus Business Interruption Loan Scheme first, and we're joined by NatWest. Daniel and Sharon are joining us for that, and then we're going to move on to talk a bit about the Job Retention Scheme. And then to round it all off, we've got one of our business advisors from our Growth Hub team who will be joining us at the end to kind of offer some practical advice. Okay, great. So we're going to move on now to introduce Sharon and Daniel, who are going to talk to us a bit about the practical aspects of how the scheme from the bank's perspective.
Hi everyone. Daniel, would you like to go first?
Yeah, sure. I'm happy to go first. Can everyone hear me all right?
Yep.
Perfect. Good. So just a couple of quick updates from our perspective. We know that from a Corona business interruption perspective, we know that there are a number of challenges for businesses, for families and for communities across the UK and across the globe. And we as an organisation have been undertaking a significant amount of work. Alison Rose, our CEO, shared on BBC News yesterday or the day before the sheer volumes of customers wanting to connect with us at those moments that matter, where we saw call volumes go from typically 3,000 a day up to 25,000 a day. And we're trying to allocate resource where appropriate, so we're retraining some of our teams and to be able to be there for the front line to help and support our customers. So what I thought would be useful, just to give you a bit of a flavour in terms of some of the things that we're doing to help and support businesses and families at the moment in the community, and then just spend a moment or so just talking in a bit more detail, high level, just in relation to the Corona Business Interruption Loan Scheme that's available to support organisations across the UK. So from a family's perspective, we've given the opportunity to our customers to have mortgage repayment holidays. That's on their personal mortgages and on their personal loans. And we've undertaken a similar exercise on some of their business loans as well. So that's being worked through as we speak. We had up to yesterday quite a significant number of requests that we're ploughing through to help and support customers to have a bit more flexibility on their payments. We've, in addition to that, have for existing NatWest customers a Mentor Live proposition. So that's a free proposition designed to help and support people with templates, especially when we're thinking around furloughing employees, but also some of those additional considerations around sickness or absence or any other challenges during that time. So that's available to help and support. What we're also doing is for existing business customers is offering fee-free overdrafts up to 5,000. And then in addition to that, we've also got some additional support when you think around being able to take payments. We know a number of businesses are still open. So Till, which is one of our merchant providers, is offering free terminals and next day settlement, which for a number of our customers, Cashflow is the key at the moment. What we're doing from a community perspective, so our Chief Executive, Alison Rose, has agreed to, along with the Chairman of NatWest Group, agreed to donate 25% of their salary to the National Coronavirus Emergency Fund. And we've agreed to match up to a significant value any donations made by group employees into that scheme as well. If I take a few moments then just to talk to you about the Corona Business Interruption Loan Scheme. So the British Business Bank, there's around 40 lenders or financial institutions that are there to help and support. We know that there have been a number of challenges getting through to those financial institutions, and there's lots of stories at the moment in the media around both good examples of where people have been able to help and support organisations, but also where it's not going as quick as we want them to. And that has been a challenge, and that's something that we continue to focus on. So headlines from a Corona Business Interruption Loan Scheme available. So that support is for SMEs up to turnover of 45 million. And these are the NatWest guidelines. Figures go from a minimum of 5,000 to £5 million. So we've got the broad range of businesses that operate in the SME sector. We split the loan term over a 6-year period, with the first 12 months being interest-free and also no payments to the capital. With interest rates subsequently, we're looking in the region of around 4.5–5% for the vast majority of our customers. There may be some that are slightly above that, close to the 6 or 7% mark, but they are few and far between. There are no arrangement fees for this particular style of funding, and the other important are there are no setup fees as well, and clients have got complete flexibility to make lump sum reductions once we get to the other end in relation to Corona. Now, my team, which support the local market in terms of Buckinghamshire, Bedfordshire, Northamptonshire, some of the best practices and some of the fantastic engagements that we have been having and a number of organisations have been having is just making sure that when organisations are coming to us to apply for funding, that they're really clear in terms of the breakdown as to what they need the funding for. We're not looking for exact pound or pence, but a flavour of, is it to pay certain staff members? Is it something from a supplies perspective? Is it something from a rent perspective? And having a detailed breakdown, irrespective of the size of the business, really helps and supports those teams with the application process. The second part to that is around making sure that we're really clear in terms of what schemes have already been explored. So I know a couple of the panelists today will be talking about some of the other schemes that are available to support business. As part of our requirements and agreement with the British Business Bank is making sure that the schemes that have been made available by the Chancellor and HMRC and local authorities are being used. And that's the second part of the discussion. And then the final bit for me, and we've seen an enhancement to the scheme as it stands at the moment over the last few days, is, there is no requirement for things like personal guarantees, and we were one of the first to set that up in that format. But what I would say, I think it's really important that we just get a flavour in terms of, your business pre-corona. Is that a business that, when you think about kind of current circumstances, a business that, we would want to continue to support? There aren't any underlying issues that were pre-corona, and if there are, let's have that real frank conversation. So work to do. This has been built in a matter of days rather than weeks. There are some fantastic opportunities to really help and support businesses that are struggling to survive and struggling from a stability perspective in the local market. But I think we're on the right trajectory, and happy to take questions on any of that.
Brilliant, thanks, Daniel.
Over to you, Sharon.
Yeah,
Sharon, do you want to add a few things, and then if people want to kind of post some questions on the chat, and I can kind of pose those to Sharon and Daniel when you finish, Sharon.
Okay. No, perfect. Thank you. So I think Daniel's given a really great overview in terms of where we are with supporting customers. And I think the key thing that we are seeing is, and having spoken to businesses all morning, it's really unprecedented times, which is obvious. And the normal rules are having to change. The way we are operating is having to change. One of the things that I want to make really clear and put as an absolute categorically, please don't think anything other than, the only reason why there is a delay in getting back to people is just because of the sheer volume of calls and inquiries that we're getting. We have done so much to ensure that people can access the loan scheme as quickly and as easily as possible. So it's an online application process that you can go through. We have email signatories so that you're not getting paperwork in the post that you then have to sign and send back. We are looking to do that as quickly as possible and support those businesses. The key thing to remember is, for a business that is looking to apply for CBIL, you must go to your existing business bank first. So you access the loan facility through your current bank. And if for whatever reason, either that bank declines the application or is unable to support, then you can look to go to a second bank. But what we would ask is, at that point, just bear with us in terms of timescales. We are, and every single lender is looking after their customers as quickly and as much as possible. As the UK's biggest bank, we've got a fair whack of those business customers. It doesn't mean we're going to turn you away, but what we will be looking for is evidence that you have been to your own bank first, and some rationale as to why. So that's some of the key things that I'd like to point out.
Brilliant, thank you, Sharon. I'm seeing some of the questions come through at the moment. Is there anything you can say from a practical point of view in terms of the process, any kind of sort of anticipation of timescales, albeit I recognise that, you know, there's probably a kind of, like, it varies from kind of client to client, but just to give people an idea of kind of what the process looks like, and kind of what the sort of average timescale, if you can have an average in, you know, in something that only launched a couple of weeks ago, looks like.
Yeah, Daniel, I think you might know this better than me because you've had some successful applications. What I would say is, to start with, is for the people that can apply online, there is an eligibility check. If you're eligible, you complete the online application process. That's the quickest and easiest way of doing it. But Daniel, what kind of timescales are you looking at?
Yeah, so I think a couple of points and clarity. So the proposition was designed in a matter of days. So and that went live back end of last week, early this week. So, and then the second part, which is the documentation, which is where we issue the paperwork. So we've approved then the facility, we issue you the paperwork, and that's normally by electronic means such as email. So we're looking in terms of turnaround time. Once your application has been approved, we're aiming to get those funds turned around as quickly as possible. There isn't an example at this stage as to what good looks like, because we're still working through getting those out as quickly as possible. But what I'd probably suggest in due course is, once we've got a few more of those applications through in terms of the typical journey, and I use that term, we'll be able to give a better flavour of timescales. I suppose the challenge here is there'll be a number of customers who started their application process or an expression of interest quite some time ago. So by putting in a timescale, what I don't want to do is disappoint those people that say, well, I submitted my application on the 20th of March. Why hasn't that been approved yet? So I think for me, I would be saying at the moment, we're working through them as quickly as possible, but there isn't a typical timescale because it varies depending on customer. So I know that's not possibly the answer you want to hear, but actually that we're just working through them as quickly as possible. And I know that's not a date, but everyone's working 24 hours to get these sorted.
Yeah, and Vicky, just to kind of reinforce what Daniel's saying there, absolutely everybody that's applying, we are having people apply who have perhaps never had lending on their business bank account ever before, through to people that have really complex financial structures already. So it is very much a case-by-case basis. But what I would say is, for every single person at NatWest, this is the #1 priority. We've all put down tools on all other projects, all other work, all other things. This is everybody's #1 priority. And I mean, for the guys that know me on this call, I work in the accelerator. I've never sold a banking product once in all my life, and I am now answering phone calls and speaking to customers about their CBIL application. every single person that can be has been pulled into supporting these inquiries. The biggest thing that we can ask is that you work with us and be patient, and look at it purely from a logical perspective. I know that everyone we're speaking to right now are business owners, so you will get it. If you increase demand on your business by more than 100%, what's going to be the operational elements? And we're dealing with that in exactly the same way.
Yeah,
Thanks.
and just to echo that, Sharon, and we're not talking just, we're talking in these instances tenfold. So it's not, we're going from 1 to 2 or 3 to 4 or 1,000 to 2,000. We're talking tenfold the volumes, which I get. So everyone, it's all hands to the pump. But at this stage, it's trying to work through them as quickly as possible. And once we've got a better idea of timescales, I'm sure that those will be communicated by the British Business Bank.
Brilliant. Thanks, guys. I'm just looking at some of the other questions. One of them, which kind of still, that we've kind of seen quite commonly, which I think you've touched on. Can you just totally clarify the kind of issue that we've seen around personal guarantees, and what the kind of position now is with the scheme in relation to personal guarantees?
Absolutely, can take that. From a personal guarantee perspective, we were the first organisation when the Corona Business Interruption Loan Scheme went live to say that we weren't going to ask for personal guarantees for those customers that had approached for those facilities. That still stands. So the Corona Business Interruption Loan Scheme is designed to support sole traders, it's designed to support partnerships, it's designed to support limited companies and other organisations operating in different entities or different structures. But there is no requirement for Corona Business Interruption Loan Scheme applications for personal guarantees. And I can confirm that categorically, and we were one of the first to launch that. And I know there's been quite a bit of press coverage that indicates other institutions have had a different approach. And some of those are universal in relation to the British Business Bank. Others are where an individual organisation, so in this case NatWest Group or RBS, NatWest Group, now formerly RBS Group, has made the decision not to take them.
Great, thank you, Daniel. Just looking at some of the other questions, one of the questions here is, are UK businesses able to access the loan facility prior to exhausting other funding channels? For example, where you've got zero debt as a business, would you be required to exercise standard commercial loan facilities via mortgage, debenture, etc., before they could be eligible for the civil scheme? Okay,
so this is where the scheme has grown arms and legs. Dara used that term because it's an evolving piece. So from my understanding initially, there was lots of discussion around exhausting other options that might be available to suit those customers. So we know that when the scheme first went live just a few weeks ago, less than a few weeks ago, there are some clients who, based on the amounts that they want to borrow or what they're looking for in terms of their business priorities moving forward beyond COVID, that the 6 years that comes with the CBIL scheme might not be appropriate for them. They might be looking for a longer time horizon. So for those customers in that situation, and let's say, for example, they already had existing security, when I say existing security, we already hold a charge over, not their main residence, but we hold a charge over a commercial premises as an example, then what we'd be doing in that situation is just making sure that the customer's got a couple of choices that are available to them. The 12-month interest free is very attractive. The 12-month capital repayment holiday, so no payments to the capital, really attractive. But for some businesses, then post that period, a loan scheduled over 5 years might be a difficulty that they don't want to face. So, there are other options that are available to those customers outside of that scheme. I think from the exhaustion perspective, we're very keen to ensure that they've exhausted other opportunities. When I say funding, it's other resources that might be available. So, if they've got some savings, we don't want to get them down to zero. That's not appropriate and that's not sensible in terms of financial prudence. But, what are the other options in terms of capital repayment holidays? What are the options in terms of some of the grants that are available? What are the options in terms of some of the savings savings or cash that they might be available? And bring that to the table to have a real frank discussion about, right, so what are your requirements moving forward? And what does that look like and feel like from an affordability perspective for your business beyond the 12 months?
Thanks. Did you
Can
want to
I
say
just,
something,
Vicky, sorry, can I just add, because I'm just looking at the questions that are being asked, and there's a few questions that are being asked in a similar vein, so Daniel and I can probably reply to them quickly, opposed to typing the answers back. But one of the questions that's being asked is, what can the money be used for from Sybil loan scheme? Can it be used for marketing and things like that? What we have found with the eligibility aspect, we are looking at, number one, how coronavirus has impacted your business. So remember, this loan scheme is for those businesses that have been negatively impacted by coronavirus. I have entrepreneurs that are actively fundraising investment. It hasn't impacted their sales, but it means that they are now looking at Sybil going, can we get a Sybil loan instead of investment? And that's not what it's there for. So this is for businesses that have been actively impacted in a negative way by coronavirus. And then in terms of where you're spending the money is not there for debt consolidation or consolidation of other loan facilities. It is there specifically for operational, for cash flow. And what we're not saying is take out the minimum amount possible. What we're saying is take the right amount of money for the period of time that you feel your business will be impacted. So for example, let's say 1st of September, businesses are all back up and running. And I'm just using that date as an example, so I don't want that to be taken in any other context. There will be businesses that will need to spend money to get their operations up and running before they start to make anything. That Sybil loan could be used for those operational elements. So if you are getting your staff back in, if you are buying goods and services, if you are buying things in to get on operational, those are sensible, logical reasons to have the Sybil loan. So we wouldn't say, oh, you only have the money until the point where your business then is up to 100%. It's about cash flow. It's about looking at that balance. And a lot of established businesses will have to consider that when they come out of this period, they are going to be operating like a startup. So they will have to consider, how do we get our operations and get our business structure back to a good operating rhythm, the timescale that will take, and the strategy that's needed for that. And the loan can be a part of that process.
Brilliant. Thanks, Sharon. I see some of the questions are around interest rates, which I appreciate that you guys are just, coming to represent the scheme, and you can only really talk from your own bank's experience. But is there anything that you can kind of just throw some light on? I mean, I know you mentioned that, the kind of average interest rate is kind of sort of 4.5–5%. But just in terms of people's experience of kind of seeing very differing interest rates on the scheme, is there anything that you can kind of, kind of shed light for people in that regard?
Sharon, or do you want me to answer?
Your choice. From a technical perspective, Daniel, you would probably answer first, and then I'll go second.
Okay, let's do that. So we talked at the beginning, didn't we, about the British Business Bank. Some of the elements of the Corona Business Interruption loan scheme are universal in terms of their approach, but it's been left to individual financial institutions to decide how best to price that in terms of from an interest rate perspective. So I think the challenge here is that other financial institutions will have a different approach to what I've shared with you today, which represents NatWest, RBS, and Ulster Bank as kind of the three main day-to-day banking brands. There are other brands as well. I suppose from our perspective, we were really keen to make sure that, in the current climate, I think we have a responsibility more than ever to help in looking after 1/4 of UK business and to be really fair, consistent and transparent with our pricing. And one of the elements that a number of customers have shared previously is that when it becomes too complex or there are too many variables that have to be taken into account that decide your interest rate, we need to be in an environment of what we call operational efficiency. So things need to be moving quickly. We need to keep them simple, and we need to ensure that customers still have choice, but we are reflective of that kind of, rather than that debate about interest rate. So they're the rates that typically we have to offer. For the most part, I think 90–95% of customers that are applying for facilities will fall into that camp. there would only really be a very small number of customers that would fall outside of that. And typically there won't be the people that are attending this particular webinar today. So other institutions are charging the way that they want to charge. We've made the decision, we want to keep this really simple. We've got variable rates and fixed rates because it's about customer choice, but we didn't want to then get into the debate of if we change it and it's higher or lower, it just gets too complicated, and we want simplicity. And our customers are telling us they want simplicity.
Thanks, Daniel. Anything to add, Sharon, or do you want me to move on to the next question?
No, we can move on to the next question. Yes, thank you.
So I think some of the categories of people that are coming up in the questions are, you know, people asking and flagging that they're a sole trader. You know, what about people who were loss making, you know, last year? And also that we've kind of touched on the kind of pre-revenue businesses. Now I know that's kind of almost 3 questions in one. But first of all, just in terms of sole traders, where would they stand in terms of the civil scheme?
They stand in exactly the same place as the other businesses.
Correct.
It doesn't matter what from an entity perspective. So the key with the sole trader consideration is, so a number of sole traders have employees in the strictest sense. So again, we would be expecting those individuals to have explored the schemes that are available, support both them as individuals, as self-employed individuals, but also then for their employees and subcontractors where appropriate. But whether you're a sole trader, a partnership, a limited company, and some of the other things that we've talked about, that scheme is still available. But it's being really clear as to what you've exhausted in terms of the government schemes available as part of a holistic package.
Thank you. And then in terms of where you're in a situation where, you know, you were loss making, or in terms of, you know, where we virus, and then also there's the kind of, you know, sort of what you're forecasting going forward. But what advice or what would you say for those who were in, you know, kind of in a loss-making situation pre-coronavirus?
Okay, so Sharon, do you want me to go on this, or do you want to go?
I'm so sorry, I was busy replying to questions, and so I didn't hear the question that Vicky just asked. Sorry,
okay,
Vicky.
so it was around loss. It's okay. It was around loss. You know, what if you were a loss-making business pre-corona? Kind of what does that look like and feel like from a support perspective? So I'm happy to cover off unless kind of your initial thoughts, Sharon.
Okay. Well, the only thing I would have said was that if you were still generating revenue, then your revenue has been impacted. So whether you were loss-making from a profitability perspective, but you had a turnover and that turnover has disappeared, you've been affected. You've been affected, and therefore you could apply. Is that as straightforward as it is, Daniel?
No,
have I just put a spanner in the works?
a smidgen. So let's cover that off, because I think it's a really good point. So there's a difference between a paper loss, and when I say a paper loss, i.e. you've got some depreciation in there in terms of your financial accounts. You might have some one-off items in the accounts that you spread over a year, 2 years, 3 years, specific expenditure, or things that, you know, they were a one-off or a blip. And we're also conscious that a number of clients won't have necessarily completed their financial year end. And so we're kind of always out of date. What I would say is that our organisation's view is let's have a bit of a sense check on those accounts. So if you know last year, as in year end 2019, you are loss making, it's really understanding what has created that loss, and are there previous years that you've made a profit? And if you've made a profit, what was the difference between those 2 years? And that's a discussion that we can have with you as an organisation to then really understand post-corona how that will work in practice. Because if you've then got a commitment at the end of 12 months, how will you then service that commitment moving forward? So I think there's an opportunity to support. Just because it says that you make a loss, there's a difference in what I call a paper loss, so items that are there that are a one-off perhaps, between that and a business that, you know, may be significantly loss-making and will continue to face a challenge post-corona. We just need to be really careful here as to, we're giving you know, that funding, and then what happens after? Because actually you're still potentially then going to struggle from a cash flow perspective, and we don't want anyone in that position. So it's not loss making, take care, goodbye. It's very much let's look at kind of the rounded picture as to the last couple of years of accounts and the applications that I've spoken to. So I'm undertaking a number of the calls myself. There have been a couple that are in that space. They made a loss last year, but we've had a real good conversation around what created that, what have they done to minimize the kind of position moving forward pre-corona, and what was the trading history previously? What are the explanations that have created that loss? Because 9 times out of 10, it's something that's outside of someone's control. And I think most lenders will take a view on that.
And actually, just to reinforce that there are people at the end of this looking at it, and we're keen to work with you on this. That's the reality of it. We're working with you. I know people have said that, oh, it's a bit vague, what is applicable, what isn't applicable, and that's because we are taking it on a case-by-case basis. We're looking at it going, what can we do that will work best for you?
Yeah.
Thanks, Sharon.
What was the third question?
I recognise that we're kind of running on into time-wise, and so we want to get on to talk a bit more about the dog retention scheme. But one last question was around pre-revenue businesses. Now, Sharon, you touched on this, and I get what you were saying on that regard. But where do businesses stand where, you know, for example, they were in a situation where they'd got sort of big investment confirmed, and actually investors are now pulling out, and they're kind of like, what do we now do? Well, they were about to take their first order, and you know, they're in a situation where, you know, things aren't, you know, what do they do? Is there anything that they can do through the scheme, or what advice would you give to them?
I haven't yet come across any businesses that had secured investment, as in had got through all the due diligence, had secured the investment and the money was going in, and it got pulled. What we are seeing are people that have been going through the negotiation of securing investment, and that has been delayed. And it's a case of, what does that mean? Because generally businesses wouldn't have put orders or contracts or financial commitments in place before securing investment. So it's just clarifying what that looks like. Because if it was a case of them, and I've spoken to a couple of our equity investment partners and catching up with them, they are still working on those investments, and there are investments that have still gone through, but it depends on the stage that you're at with raising that investment. I know that we've got colleagues from Medilink on the call here today, and they will tell you they are still actively providing funding. Innovate UK are still actively providing grants and funding. So those pots haven't gone away. But if you were in the process of raising investment and that has slowed down, so this isn't a bank answer. This is my own experience of working with hundreds of entrepreneurs and looking at raising investment. It just means that that process is delayed, but those investors are still around. What I would look at is, from an operational perspective, what was that money being raised for, and how that, again, if that's been impacted by coronavirus, then explore the CBIL route. Daniel, would you add to that?
Yeah, I think you've summed it. So I was doing what you were doing, Sharon, which was looking at the chats and still listening, multitasking. I'd agree, and I think, you know, where entrepreneurs have worked really hard to get to that stage, kind of pre-revenue, you know, that's not easy to get to that stage, and it'll be really disheartening and soul destroying where they're seeing funding pulled. I suppose when I think of it, and I'm going to apply what I call a COVID-19 lens on this, and I think it's, you know, by those individuals going live now, and let's say they secured the funding using the CBIL scheme as an example, what is it that they're actually going to be able to do moving forward in the current climate? And I think that's the challenge that we have, that, you know, people are really keen to carry on with some of those fantastic ideas that in normal times would make a real difference to, you know, business, you know, so families or businesses or communities. But I think if we apply that mindset that says, well, actually, if I don't do it now, and I've not entered into any formal agreements where I'm committed to doing something, you know, can it wait? And it pains me to say it, because actually we're in business, right? But I think the scheme is designed to support that position where it's kind of startups or businesses already trading initially, that, you know, by them not doing what they're doing, they're going to face a real challenge. So I think it's just that there's not a one size fits all, but that's kind of where my view is, which echoes what Sharon said.
Brilliant. Thanks, guys. I think it's been really helpful to kind of talk some of those things out. So thank you for your contributions. What we're now going to do is move on to talk a bit about the job retention scheme, which is one of the schemes that you mentioned can help businesses who employ people. And I'm going to hand over to Alex to give us a bit of an overview of where we are with the job retention scheme. Thanks, Alex.
Lovely. Thanks, Vicky. I'm just going to share my screen. I have practiced this, so hopefully it's going to work okay. Can you see that okay? Yeah, lovely. Okay, so we're going to talk you through the coronavirus job retention scheme. As similar with what's been mentioned earlier, it is an emerging picture, so we're getting more detail almost daily at the moment. So I can definitely share with you what we've got so far. So first of all, I'm Alex Butt. I'm one of the HR consultants at HR Solutions. I've got Louise Ballock with me today. She's one of our new HR advisors. So she escaped having her picture taken so far, but she's on the call and she's going to answer questions if you want to put them in the chat while I'm speaking. Right, so the Government UK Retention Scheme, it's been put in place to support businesses at this time. Like I say, details coming through, and we do have a much clearer picture than we did initially, so we can share that with you. So it's been put in place to support businesses. It includes charities, recruitment agencies and public authorities during the outbreak. It's there for people who are struggling to maintain their workforce due to their operations being severely affected by COVID-19. It aims to help employers retain their employees and to protect the UK economy. So to use the scheme, you need to designate affected employees as furloughed workers and notify your employees of this change, and that changes their status. Other than that, they remain subject to existing employment law. You'll be required to submit that information to the HMRC about the employees that have been furloughed and their earnings, and that's through a new portal that's going to be set up. We understand today that's due to be set up on the 20th of April, with the first payments actually coming through on the 30th of April, which is really good news for people. So HMRC will reimburse 80% of furloughed workers' wage costs up to a cap of £2,500 a month. That equates to a £30,000 a year salary. Like I say, HMRC are working urgently to set this up, and you know they're on target for their initial estimate of end of April. The existing systems in place can't facilitate payments to employers, so it's having to be set up from scratch. So whilst your employees are furloughed, they must not work for you. That's one of the clear rules, and I understand they're actually asking employees to report employers who are asking them to work while they're furloughed. In relation to the remaining 20%, there's no requirement for you to top up that 20%, but you can if you choose to. And one of the strict rules is that the furlough period must be for a minimum of 3 weeks. As we've been hearing about, there is access to the Interruption loan scheme if you're having difficulty paying employees. And you can also defer payments where you have set up workers as furloughed until you receive those payments back from HMRC. We would advise that you let employees know if that is going to be the case, if they're expecting to be paid at the end of the month and it is going to be delayed. Obviously, it would be preferential to let them know. So, who can claim? All employees are eligible to claim under the scheme. It's expected that the public sector will not use the scheme as they're going to be majority key workers. To make a claim, the portal will be set up. You can backdate your claims to the 1st of March 2020. In terms of backdating, you're backdating to when the employee stopped working. So you may have laid them off, and you can transfer that to this scheme to be furloughed. The claim should be made using the amounts in your payroll reduced to 80%. After you submit your claim, HMRC will check these claims, and they have confirmed they will be open to checks, and you should receive the grant for their gross pay. In this particular element, we're still waiting for more clarity and guidance around exactly how it's going to work. Okay, to make a claim. So to be eligible for the grant, you must confirm in writing to your employees that they have been furloughed, and these records must be kept for 5 years. You need the PAYE reference number, the number of employees, the period, the amount to be claimed, your account and sort code, and contact name and number. That's information we know so far. So you can claim 80% of wages up to the 2,500. Skipped a slide there. You can also claim your pension contributions up to the auto-enrolment level. So currently auto-enrolment is 8% made up of 3% employer contributions. So you can claim that back as well, which is really good news. Some of our clients were quite concerned about that. And you can also claim the national insurance contributions. You can factor in overtime, but not commission in your claims. So just to be clear, what you cannot claim for: any discretionary bonuses, tips and commissions, any non-cash payments or benefits in kind, and salary sacrifice schemes. What a few of our clients are doing, where they might have more enhanced pensions, for example, or benefits, is actually consulting with staff about making temporary reductions on those for this period. And generally we're finding employees where they are seeing that the businesses are trying to protect their jobs long term are quite amenable to making temporary reductions at this time. So if salaried employees, quite straightforward, it's 80% of the employee's salary at the 28th of February 2020, and that's before tax. We've had a few queries where people's salaries might have increased after that, but you do need to use that date, 28th February 2020. For employees who receive variable pay, there are two ways to calculate the furlough amount for them. You can either use the same, or it's the higher of, should I say, the same month's earnings from the previous year, or the average monthly earnings for the 2019-2020 tax year. Even employees being with you less than 12 months, so possibly 6 months, you claim 80% of their average monthly earnings since they joined you. In terms of national minimum wage, so if your employees are on national minimum wage, for example, we've had this query a lot where if you pay them 80%, you'll be paying below national minimum wage, and that is allowed within the scheme. So you can pay less than national minimum wage. The only time that isn't applicable is where you're asking employees to do training. If they're doing training within the furlough period, they should be paid their full wage. Sorry, not their full wage, national minimum wage. So, who can be furloughed? Employees must be on the payroll from the 28th of February 2020 to be entitled to be furloughed. You may have seen that you can re-employ people who have left you from that period, but we are advising some caution there, because they will retain their continuous service, and you will have some costs around holiday entitlement, which, you know, given the difficulties around cash flow and all the challenges, might be risks that you're not able to take at this time. You can furlough some employees and keep others on, and this is a big question for a lot of people, and a difficult decision where there's a reduction in work but not a stoppage of work. How do you decide who to be furloughed and who's not going to be furloughed? So within the scheme and the legislation, you can essentially pick who you like to be furloughed. In all likelihood, people are going to keep their best performers in the roles at the time, but it can cause resentment either from those furloughed who might wish they were at work, or those at work who might wish they were furloughed in some instances. So really the key thing is just to make sure your decisions around this aren't discriminatory in any way. So we're not particularly saying, let's furlough all the women because they're homeschooling the children as a really bad example. So just carefully consider fairness and how employees might perceive it. You also might want to look at rotating furlough. So where you've got a big team but you don't need to furlough everybody, subject to the 3-week minimum, you might furlough on and off almost teams of staff during different points in the scheme. So furlough applies to employees who were made redundant or stopped working on or after the 28th of February. This is where you would be rehiring employees, but we must again advise just some caution here, because they will maintain their continuous service in all likelihood, and they'll go into higher levels of service if you were looking at making redundancies later on. Where an employee is on a fixed term contract, their contract can be renewed or extended during the furlough period without breaking the terms of the scheme. And again, that's a decision for businesses whether they would be in a position to do that or would want to do that. There's no requirement to, but you can. If the employee's contract ends and is not renewed or extended, employees cannot claim through the scheme, obviously. You must always consider the 3-week minimum when you are extending. Employees with more than one job can be furloughed from 2 or more jobs, however many they have, and they can also be furloughed from one job and not the other. There's no restrictions there. Shielding employees can be placed on furlough if they're unable to work from home, and you would otherwise have to make them redundant. And also those that have caring responsibilities resulting from the COVID-19 situation can be furloughed. For example, an employee who needs to care for a child. If an employee is currently off sick and claiming SSP, they're not entitled to be furloughed, and their SSP continues until it comes to an end at such point that they're fit to return to work, and then if there is no work, they would be eligible for the furlough scheme. So where furlough doesn't apply, if you've short-timed employees prior to the scheme coming into place, so you might have your employees, for example, on a 40% reduction of work, you cannot furlough them while they're doing the reduction. You can end the reduction in work and then furlough them if there's been a further reduction. As I said, employees on SSP would not be entitled to furlough, and employees on other statutory leave, such as maternity, paternity and adoption, would not be entitled to furlough. They would continue on that leave until such time as they end that leave, and then you can consider them for furlough. So like I said earlier, you can't work for your own employer while you're furloughed, but you can volunteer, and it's also been confirmed you can work for somebody else during this time, as long as that's contractually allowed. And if it is debatable in the contract or the employee needs to gain permission, we'd advise you to make it clear that if employees do seek any alternative work, that they would be required to come back to do your work with no notice. So you might agree to evening working, for example, if you required them during the day. So in relation to holiday whilst on furlough, and we've had lots of clarity around this over the last week. So holiday can be taken without breaking a period of furlough. So if you've got an employee that you've put on furlough and they've been on furlough for 2 weeks and then have a week's holiday, that's absolutely fine. You're still meeting the criteria for 3 weeks. Holiday, however, is the exception to the 80% rule, in that you would have to top up the 20% if they're on holiday. There is some new legislation being introduced that holiday can be carried over into the next 2 years if it's been hard to take that holiday due to the current situation. Employers can also enforce holiday, and this can be done at any point, although a lot of employers don't tend to do this. But where you want to force holiday, you need to give the employee twice as much notice of the holiday that they need to take. So if you want all your employees to take a week during furlough, you would need to give them 2 weeks notice of this. So I know for some of my clients with sort of higher numbers of employees who are worried about having to manage holiday and the ongoing accrual of holiday, that's been really key for them, that they can ask employees to take a proportion of their holiday during furlough. Again, it would be at full pay, just remember that. And employees may, of course, request to cancel holiday if they can no longer do their plans because of the situation and restrictions. So just sort of thinking ahead, we don't know yet if the scheme will be extended. You know, we hope it will be, of course, if people are still affected and businesses are still affected. And it's hard to see how we wouldn't be. So if the scheme does come to an end and you need to be looking at alternatives, some things to consider are to use annual leave where possible, to consider unpaid leave, short-time working and layoff. So if there is a short-time working and layoff clause in your contract, you could implement that at the end of the scheme. I'll give you a bit more information about that in a second. Or you could use, as we just spoke about, you could enforce holiday. So if you have the clause in your contract, you can force a reduction in hours or layoff. So this is subject to any collective agreement, which a lot of small businesses don't have. You would literally have an informal meeting. The employee doesn't have the right to be accompanied, explain the situation and, you know, the impact to the business of the current circumstances and why you're taking that action, and then confirm it in writing to the employees. Employees who are laid off, so that's with no work, would be entitled, and this is assuming the end of the job retention scheme, would be entitled to statutory guarantee payments. These are made at £29 a day for a maximum of 5 days. So it's a total of £145 per employee. It's pro rata if they would normally earn less than that. If you're short-timing employees, less than 50% of pay, particularly less than 50% of pay, after a month they could claim redundancy, so just be aware of that. There's no legal time limit to layoff, but they can claim redundancy from 4 weeks. And then, of course, one everyone's trying to avoid, and what the scheme's set up to avoid, but redundancies. So it might be that, unfortunately, you do perceive that not all of your work is going to come back, or your position might have changed, or like Sharon talked about, you might be in a completely different place at the end of everything that's going on currently. So it might be you do need to make that difficult decision, that there are going to have to be some redundancies. So there's lots of factors to consider in redundancies. The number of your employees affects the length of the consultation. So less than 20 employees affected by redundancy would be deemed as a reasonable consultation, so you could complete that over a couple of weeks. 20 to 99 is 30 days, and 99 plus is 45 days. You also, of course, need to factor in notice payments that people might be entitled to. And there's a really good tool on the government website if you wanted to, you know, in terms of understanding your liabilities, work out the calculations for what redundancy payments employees would be entitled to if you did get to that situation. Short service employees, so those with less than 2 years service, have more limited employment rights. So redundancies in those situations are much easier in terms of the requirements for the length of consultation can be cut down in that situation. So that's it. Thank you. I hope I've covered everything. I'm not sure how many questions have come in.
Great, thank you, Alex. I think there's been some come in, but I know Louise has been busy trying to answer some of them in the background as well. Somebody did have a question about if there's a garden leave clause in people's contracts in terms of full pay around the garden leave, and how that would kind of impact in terms of furloughing staff.
Okay, so you can, have you answered that, Louise?
No, I haven't gone back to you. I was sort of in the process, and then I was just going to make sure that we were in line in terms of
response.
Yeah.
Go ahead if you like.
So obviously from obviously my perspective, obviously they would be entitled to be paid in full for their garden leave period. Obviously in theory they would be able to be placed on furlough for that period, because obviously the work's not there, obviously they're not working anyway. So you'd be able to claim back that 80%, but you'd then have to top up the additional to make it up to their full salary.
You would or you wouldn't?
Would have to.
Would, yeah. This is a question actually that got asked on the HMRC Twitter. I saw it this morning, and they'd gone back to say we're not quite in a position to answer this one yet. So normally, if the notice was longer than statutory notice, you could pay it under furlough or statutory paternity or whatever that it falls into. If it is statutory notice, it would have to be paid at full pay, exactly like Louise said. You'd have to top it up to full pay, but you could claim through the scheme at that time as well.
Right, thank you. There's been a couple of questions around you mentioned voluntary work. What's the definition of what voluntary work you could undertake for your employer during furlough?
Again, I don't know if you want me to sort of
go on.
So obviously in terms of voluntary work, I think they have been quite vague in terms of what voluntary work would consist of, other than the fact that obviously it can't provide a service or generate revenue for the company. That's sort of the only definition we do have. So obviously then in terms of can you then get them to do work that they'd normally do if it doesn't generate revenue or provide a service and class it as volunteering, I think that would be going against sort of the idea of furloughing employees, and it would sort of be frowned upon in terms of then claiming furlough and getting them to do that volunteering work. Yeah, I think it's a difficult one to answer definitively when obviously, like I say, at the minute there's not that much guidance surrounding exactly what voluntary work is.
Yeah, I think you're right though. It is unpaid work. It's volunteering. I don't believe there's any definition around it has to be for a charity or it has to be for a certain type of organisation. But they have been very clear that you cannot work for your own organisation. So a couple of people have asked us, can they volunteer for us and while they're furloughed? And that is a definite no, unfortunately.
And then just one last question, because I realise we're short of time. Someone's asked if they're a managing director of a limited company, can they furlough themselves?
You were looking at that, Louise, with the directors.
Yes. So obviously, a limited company.
They've given some guidance around the fulfilling that you can fulfil your role as a director while you're furloughed. So I think the technical answer is yes, you can be furloughed and fulfil your responsibilities as a director. Are you thinking about a company's house, Louise?
Yeah, obviously I was just thinking, obviously, as long as you don't then have to conduct any work that's not classed as that sort of statutory minimum that you'd have to do to support the business, I guess in theory you would be able to be furloughed. Obviously, yes, the issue does cross if you then, obviously potentially have to unfurlough yourself. And I guess it's the risk of whether you can do it for the minimum of the 3-week period before you'd potentially have to do some work that wouldn't constitute the sort of statutory minimum in terms of the general processing of the business.
Yeah, absolutely. And we've generally advised companies depending on size and lots of factors, but you're going to have queries from employees. There's going to be certain things to do outside of that minimum. So most organisations will need one designated director or somebody, obviously it depends on size, but who is available to pick up that work. So there would normally be one person not furloughed within a business, depending
Thanks.
on size.
Thank you both. We're just going to sort of wrap things up in a minute now, because we've kind of come to the end of our session, and I'm sure that the panelists will continue to try and answer some of the questions in writing on the chat and the Q&A. But I just wanted to hand over just for a couple of minutes at the end to one of our business advisors, Ruth, who leads our business advisor team, just to kind of wrap things up and kind of share a few kind of practical tips with businesses as they kind of think about, you know, kind of how they want to take things forward and potentially, you know, what they're doing with these schemes and how they're planning at the moment.
Thank you, Vicky. Yeah, basically we are impartial, so we will work on behalf of businesses. I'm not on the screen. We'll do on part of businesses to help you become finance ready for the Sybil scheme. There are over 40 funders out there, and they all do different things. It isn't just a loan scheme. You can do overdrafts, you can do loans, invoice finance, asset finance, and we are here to help you create cash flow forecasts, which we have got one which we can send out. We are here to help you do your business plans. We're here as mentors to answer any questions that you might have. We're here to help you navigate the government schemes that are available, both through the coronavirus situation and also, as Sharon rightly pointed out earlier, the other national schemes and funding schemes that were available before this and are still available now. So there are other options out there to you. We can provide support, understanding what's needed from your bank or your funder. If you've never applied for a bank loan or any bank funding before, we can be your sounding board as to what the banks and what the funders need and to help you assess your business. So we are impartial. We provide free support, guidance and advice for everybody, every business out there, whether it be sole trader, social enterprise, limited company, through to, you know, SME status. We can help you get through this. We are working on the hashtag whatever it takes, so please do contact us. The details of how to get in contact us will be sent out through the SEMLEP Growth Hub and the phone number, and we have a team of 5 business advisors ready to help your businesses get through this. Very short, very sweet. I did have a lot more to say, but we can do this on a one-to-one basis to any business that wants our support. Thank you.
Brilliant. Thank you, Ruth, and thanks to all of the panel for taking part today, and kind of, you know, being kind of open in some of your responses, and hopefully for those who've joined us this morning, that we have helped to clarify some of your questions. You know, I recognise that, as I said at the beginning, it's an evolving situation, and, you know, our kind of hope is that we can just kind of provide more clarity than perhaps you had before you joined it. But as Ruth mentioned, we have got advisors who can chat to you one-to-one, and, you know, if you want to kind of follow up with anything from what's been discussed this morning, please do get in touch with us. And you know, to flag that actually we work very much in partnership, which is why it's not just us on the webinar this morning, that we've brought some of our partners in as well. And, you know, there is a big support community out there in terms of chambers, FSBs, your local authorities, banks, local accountants that we work with, just to name a few. And, you know, do get in touch, do reach out for support, because there are people there who genuinely want to kind of help you through this difficult time. But I think we're going to finish there. We have recorded the webinar, so we will be putting that online later on, so that you can watch back if there's bits that you've missed. And yeah, I hope that you all have a chance to have a bit of a break over Easter. We will be running more webinars, and we've kind of put the details of our website up on the screen, but we not only sort of put together a program of our own webinars, but we also promote webinars that are taking place from our partners as well. So if you visit our events page, there's lots of webinars that are being put on at the moment by ourselves and partners to really try and help you through this time. So happy Easter, thanks to all the panel, and hope to see you all again soon.